Thank you. The greatest way to create value in a mining company is to have exploration success, make a discovery, and I'm pleased to say that's what we've done in St. George in the past 12 months. Our projects are in Western Australia. We have a focus on nickel and gold, 3 projects we have, but the one that's delivered the discovery is the Mount Alexander project. That's a map of the area there. We're close to the Agnew-Wiluna belt, which already has a number of world-class nickel and gold mines. What's important about that is that we're close to infrastructure. We're close to roads, gas pipelines, power, and also close to processing plants. That means we won't have to come up with $200 million to develop this project. It's going to be very easy to develop it with very low capex. The features of the mineralisation that we've discovered, firstly, it's shallow. It starts 30 metres below surface. That's ridiculously good. You don't need to be a mining engineer to understand the favourable economics from mineralisation that's 30 metres below surface. We're currently drilling, trying to do the definition drilling to prove up the size of the resource. Already we have established mineralisation over the 4-kilometre strike of the Cathedrals belt, and we've still got 200 square kilometres of underexplored area as well to test. It's high-grade mineralisation, it's nickel sulfide. It's also got copper, cobalt and PGEs. These are all key battery metals, as you're hearing over the last 2 days, so there's going to be a very strong demand for this mineralisation. We've done MET testing, very favourable results so far, 99% recoveries in bulk concentrate, high grades 18% nickel in a nickel concentrate, a separate copper concentrate with 32%, and high credits for the cobalt and the PGEs. Simple flotation process and no nasties like arsenic or talc, etc. These are just a sample of the intersections, some of the best intersections we've had. So with nickel sulfide exploration, if you get 5 or 6 metres, you get really excited. That's a very thick, or almost certainly economic intersection. We've got those, and last year, around November, we hit 17.45 metres from 37 metres down hole, high-grade nickel, copper, cobalt, and PGEs. You can have a look at some of those cobalt grades. They're probably higher than some of the cobalt standalone projects that are being promoted. We're continuing to drill out right now. The Cathedrals belt has been really quite freakish for us. Electromagnetic surveys are used to identify targets, and we've had a 100% success rate with drilling these conductors. That's just a summary of the MET testing. I've already been through that, but very, very good results. We're going to produce a very clean, high-value concentrate, which will be in demand from smelters and attract a premium price. So the project economics are emerging very, very favourably. Low-cost mining, low-cost drilling because of the shallow mineralisation. The deepest mineralisation we've hit so far is 150 metres. Most people will be thrilled to have a mineralisation 150 metres. For us, we're really spoilt with the 30-metre stuff. Existing infrastructure means very low capex, and the concentrate being produced is very high quality, so we're looking at pretty high margins, we believe. Nickel theme, we definitely think it's a good time to invest in nickel. The stockpiles are going down. That graph shows the stockpiles are going down and the nickel price going up. That trend is continuing. Very difficult to pick the movements day to day, let alone week to week. Last week we had a fantastic surge in the nickel price. Last night it was down about 3.8%. But what is undeniable is the trend. The trend is definitely up. Wood Mackenzie, the expert forecasters, are suggesting a long-term forecast price of $21,000 a tonne. That page says $21,000 a tonne. They already revised it up to $22,000 a tonne. And the main reason for the increase in the nickel price is the EV revolution. Forecast of million-tonne deficit by 2025. Again, you don't need to have a PhD in economics to understand the price pressure on nickel when that happens. McKinsey & Co have come out and suggested there'll be a price divergence between the Class 1 nickel sulfide and the Class 2 nickel laterite, pig iron stuff. That latter stuff cannot be used for battery. It can be manufactured into battery grade, but it's very, very expensive at the moment. It's not viable. So nickel sulfide will attract a premium. BHP last week announced that they will be selling 90% of their nickel production to battery manufacturers. If you said that to someone 5 years ago, they would have called you crazy, but it's real. 90% of BHP's nickel production is going to battery manufacturers. This is a comparison with some of the other metals. We think nickel has not really gone for a big run yet. The other metals are trading at or close to their long-term forecast. Nickel is really a 50% below its long-term forecast. How high can nickel go? Wood Mackenzie say the long-term price forecast is $22,000 a tonne, so the current level of 15,000 has still got 50% upside. The high in the previous cycle, back in March 2007, was $54,000 a tonne. I don't think anyone's game to say it's going to reach that, but it certainly could. There certainly is scope for it to go to 30,000 plus, and I assure you all the nickel producers will be extremely pleased if that happens. A small snapshot of our corporate position. We've kept a fairly tight capital structure, 278 million shares on issue. The top shareholders are still the founders. I founded this company with my business partners. We've each put about $2 million into the company. We're very focused on shareholder return. We want investors to make a high multiplier return on their investment. We are starting to attract institutions. City Natural Resources High Yield Trust from London, the CQS Group, is our largest institutional shareholder. And we're also attracting new ones from Australia as well as foreign parties. That price graph is quite interesting. You see the big spike in November last year. That's when we hit our 17.5 metre intersection. That got people very, very excited. Institutions were buying, everyone was buying. We had to stop drilling over Christmas. We didn't quite get another 17 metre intersection. We got 13 metres, 15 metres, 10 metres, all very, very good intersections. We are certainly fleshing out the size of the resource. We'll continue drilling for another couple of months, and then hopefully we'll get a resource estimate out by the end of the year. So the results are very, very good, but support in the share market hasn't been as good as it should. We hope that recovers. It certainly provides a buying opportunity for new investors. It's a great time to start buying St. George. So the value proposition, we've made the discovery, so there's very little downside risk, we think. We've made the discovery, we've confirmed it's high-grade nickel, copper, cobalt, PGEs. It's got favourable economics. What we're doing right now is drilling to define the size of the resource. At the same time, we're seeing an upswing in the nickel price, so both those factors will converge and help a major re-rating of St. George, creation of substantial shareholder value. Thank you. That's a presentation.